So on the switching bit, Nilesh, just one point which, Anup mentioned that it's now free and unlimited. Is that the right way to look at it? It's free every time you do it and it's unlimited. You can do any number of times.
Absolutely.
There used to be a cap earlier, right? You could do 3 or 5 or something.
Yeah, so that is not there, and basically it is based on the customer's risk profile, I guess, or how he sees what is happening in the market. If he decides to do something, we'll just support it from the back end.
And while the customer can do it herself or himself, but you also have the option where you can do the switching on behalf of the customer. That's some default kind of an option that you take.
So there are, in all our products, we do have some standard, mechanisms which we provide as functionalities, which can make this possible.
Sure.
But again, it is, I think, up to the customer to select it upfront or at any point in the product life cycle to say that I want to go for this option where automatic switches can happen. And if that is built in the product, then we'll be able to do it.
Sure. Anup, I want to talk a little about the rising star, feature that you have, because I think, and tell me if I'm wrong, but I'm seeing increasingly people, especially the younger couples, getting a lot interested about investing as soon as they have a child.
Yes.
I think that's become like one of the biggest triggers for people to start investing.
Yes.
At least all the queries we get here on the Money Mile indicate that, no sooner has a couple had a child that they started getting interested about wanting to know. How does that work, and what is the benefit that brings to the table?
So you're right. Child remains to be the biggest event for trigger for buying child plan.
Yeah.
And that's happened in the case with me also. The Rising Star benefit is a child plan benefit in our product, which is
in the Wealth Plus.
In the Wealth Plus, it's an option the customer has to opt.
It's a rider or an option?
It's an option.
Okay.
The customer has to opt. The way the Rising Star is again distinctively better place in the market normal child plans are. In a normal child plan, I don't want to name companies, but the way it triggers is if I bought a 20-year term and if something happens to the life assured in, let's say in the 5th year, your future premiums are waived. And the way it is waived is the 6th premium gets put by the company on the policy 6th anniversary, the 7th on the 7th anniversary, the 8th on the 8th, and that's as follows till 20th year. The Rising Star uniquely does a very different thing. It, on the death of the life assured, it invests all future premiums at the same time.
Okay.
Which means your money, in the same example, gets invested for 15 more years and starts generating your return for all the 15 lakh rupees invested in the 6th year till the policy term.
Okay.
And hence the chances of being able to meet the goals and get higher fund value is much higher in the Rising Star benefit.
Okay.
And today almost 1/4 of our business on the Wealth Plus are customers which are opting for Rising Star benefit.
So when you say they're opting for it, is there an extra charge you have to pay?
Yes, there is a mortality charge which increases because it has...
By how much?
It depends again on the age of both the life assured and the proposer.
Okay.
But just if I to take in a simplistic example for without a Rising Star example, your mortality cost will typically range between a 0.5 to a 0.6 to 0.7 depending on your age.
Okay. If you take the option.
No, this is without Rising Star.
Without the option.
With the Rising Star, it will be depending on ages of both.
Right.
Will be can be upwards to 1% or more. Okay. But it depends on multiple combinations, so it's not easy to put a number there.
Sure.
But that's how it operates.